Bit of business news now. Joining us, Peter Switzer, as he always does on a Monday morning, founder of the Switzer Report. Pete, good morning to you. So can you trust the rally in stocks last week?
It's an interesting question, Pete. You know, the S&P 500 is up 7% for the first quarter. NASDAQ up 16.7% for the first quarter. And that's the best since 2020. And it's a big rise. Helping the market was the inflation number that came out on Friday. They call it the Core Personal Consumption Expenditure Index. And I know, Pete, you watched that very carefully because that's the Federal Reserve's favourite inflation number. It came in lower than expected. So that's another good thing. But, Pete, we've got this battle going on. I think the market believes that we're getting close to the top of the interest rate rise cycle. Inflation is starting to trend down, but you've still got this black cloud crisis associated with banks. I think that's going to hold back a bit of enthusiasm. But if there's no more bank revelations, I think the market will really take this on board, because April is the best month for the Dow Jones. It's about the third or fourth for S&P 500 and NASDAQ, but it is historically a very good month for stocks. So if there's no more banking crisis issues coming along, this rally could keep on going.
Okay, big day at the RBA tomorrow. Pete, what's Phil Lowe going to do?
He has to pause, mate. He has to pause. Look, no one knows the implications of the previous interest rate rises. It's the fastest monetary policy tightening in Australian history. We've got this mortgage cliff happening around the middle of the year. Putting it all together, and given the fact that retail is starting to come off the boil, the inflation number for February was better than expected. I think it's wise that he pauses, and I think the market will like it. It's a sensible way. But he has to also avoid a recession. He has to avoid a recession, and this pause could be a very good.
But the Europeans didn't, Pete. The Americans didn't. Inflation is still high. There's certainly enough in the argument to suggest that he shouldn't, that he perhaps should rise one more time.
Yeah, I think the Europeans have a much higher inflation rate, Pete, and America's wages are rising faster than us. So I think there's an alternative argument. Okay. And as I said, monetary policy, Pete, works within 6 months to 18 months. And those previous interest rate rises could really come back to haunt Phil Lowe. The last thing he needs is a recession after that 2024 call where he said rates wouldn't rise until that year. I think he needs to navigate us through, bring inflation down and avoid a recession. If he does that, all might be forgiven. Okay.
US jobs report, what can we expect from that, Pete?
Yeah, we're looking at that number. 248,000 is what the Economist survey is saying. If that number comes in below it, the market will really like it. It will reinforce the rally. This is where we started talking at the very beginning of this interview. I think if the number is showing that the US job market is slowing down, it'll be great for stocks.
All right, Peter Switzer, good to chat as always.